Chapter 7 Dissolution of Partnership Firm 1. Introduction. So far we have undertaken the study in context to continuation of business in spite of changes in partnership due to the admission of a partner or retirement or death of a partner. This brings to the end of a partnership, but it is not dissolution of a partnership firm. 2. Meaning of dissolution. Dissolution means end of existence. Here, dissolution is to be studied in the context of dissolution of partnership and a partnership firm where two issues are considered for dissolution. 1. Dissolution of a partnership firm. 2. Dissolution of partnership. When a partnership firm closes down its business on a permanent basis, that is, or a firm becomes non-existent from legal point of view, it is known as dissolution of a partnership firm. In brief, when a running firm is closed and its business activities are closed, it is dissolution of a partnership firm. When except one partner, all partners get separated from a firm, this is also an end of a partnership. If this continues, one partner will become the owner of sole proprietor firm. In this case, also a partnership firm gets dissolved. When running business of the firm is sold to a joint stock company, this is also dissolution of a partnership firm. 3. Dissolution of firm and partnership. It is essential to understand the meaning of firm dissolution and partnership dissolution, which is as follows. A. Dissolution of firm. As per Section 39 of Indian Partnership Act, when all partners get separated through dissolution of firm, that brings end of their partnership. It is known as dissolution of firm. In this manner, when partnership is dissolved and closed down the firm, it is dissolution of firm. The business of the firm is closed down in these circumstances. As a result of dissolution, liabilities of the firm are paid from the realization of the sale of assets. From the remaining surplus capital of partners is redeemed as per their contract. When the entire business of the firm is sold, that is also dissolution of a partnership firm. B. Dissolution of partnership. When business is not closed down due to retirement of a partner, death of a partner, insolvency of a partner, or due to any other reasons, and remaining partners keep business continues, it is a dissolution of old partnership. Except outgoing partners, remaining partners keep business continues. Consequently, new partnership takes place. Generally, the proportion of partnership changes between continuing partners. In these circumstances, partnership firm does not get dissolved, but new partnership comes into existence due to reorganization of partnership. Partnership is a relation of partners, while firm is a group name of all partners. C. Difference between dissolution of partnership and partnership firm. Base. Meaning. Dissolution of partnership. Reorganization of partnership means dissolution of partnership. Dissolution of partnership firm. Permanent end of partnership firm is dissolution of partnership firm. Base. Existence of firm. Dissolution of partnership. The existence of firm remains, continues. Dissolution of partnership firm. There is end of existence of the firm. Base. Books of accounts. Dissolution of partnership. Books of accounts remain continuous. Dissolution of partnership firm. Books of accounts are closed. Base. Settlement of accounts. Dissolution of partnership. No accounts are settled, but profit or loss arise due to revaluation is credited or debited respectively to partners' capital accounts. Generally, accounts of outgoing partners are settled. Dissolution of partnership firm. Accounts are settled. Through realization account, disposal of assets is done and liabilities are paid. Surplus amount is paid to partners for their final settlement. Base. Interference of court. Dissolution of partnership. It is voluntary dissolution of partnership. No need of court's interference. Dissolution of partnership firm. Whenever required, court interferes. Base. Effect. Dissolution of partnership. There may not be dissolution of firm due to dissolution of partnership. Dissolution of partnership firm. There is automatic dissolution of partnership when partnership firm is dissolved. 4. Dissolution of partnership firm. In this chapter, we will undertake study of important aspects of the dissolution of a partnership firm. Subsequently, we will undertake study of accounting treatments for the dissolution of a firm. A. Methods of dissolution of firm. B. Legal and other provisions for accounting settlement of dissolution. C. Procedure of dissolution. A. Methods of dissolution of firm. As per Indian Partnership Act 1932, there are two methods for dissolution of partnership firm. 1. Normal dissolution or dissolution without interference of court. 2. Dissolution by the court. 1. Normal dissolution or dissolution without interference of court. Through any of the following methods, partnership can be dissolved without the interference of court. 1. By agreement. When all partners agree to dissolve the firm, partnership firm can be dissolved at any point of time. It is voluntary dissolution. 2. Dissolution as per contract. Dissolution of a partnership firm can be done on the basis of predetermined contract between the partners. 3. Dissolution as per Act. In the following conditions, there is compulsory dissolution by the Act. A. When all partners of the firm become insolvent, or except one, all partners become insolvent. B. When business of firm becomes illegal, this also brings dissolution of a partnership firm. 4. Dissolution on happenings of certain contingencies. A. If constituted for a fixed term by the expiry of that term. B. If constituted to carry out specific aim by the completion thereof. 5. Dissolution by notice. Where the partnership is at will, the firm may be dissolved by any partner giving notice in writing to all the other partners of his intention to dissolve the firm. The firm is dissolved as from the date mentioned in the notice as the date of dissolution, or, if no date is so mentioned, as from the date of the service of the notice. 2. Dissolution by the court. When any partner files a suit for dissolution of a firm on any of the following grounds and the court orders to dissolve the firm. 1. When any partner becomes of unsound mind. 2. When a partner becomes permanently incapable of performing his duties as a partner. 3. When a partner undertakes misconduct against partnership firm or against business of firm. 4. When a partner willfully and persistently breaches the partnership agreement. 5. When a partner transfers his whole interest in the partnership to a third party without the consent of other partners. 6. When a firm continuously incurs losses and is unable to run a business due to loss. 7. When the court finds any other ground to be just and equitable for the dissolution of the firm. B. Legal and other provisions for accounting settlement of dissolution. 1. For loss of a firm. As per Indian Partnership Act, the loss arises including capital deficit at the time of dissolution is executed in the following manner. A. First of all, to be written off from the profit of the firm. B. If profit is not sufficient, then it will be met from the capital of the partners. C. If capital is not sufficient, then all partners would distribute this loss in their profit-loss sharing ratio and pay from their personal assets as per need. 2. Liabilities of a firm and personal liabilities of partners. The liabilities of partners are unlimited. Thus, for dues towards third-party partners are responsible individually and collectively. As per legal provision, assets of the firm are used to discharge the liabilities of the firm and personal assets of partners are used to discharge their personal liabilities. Since the liability of the partners is unlimited, after making the payment of personal liability from personal asset, surplus can be used to pay the liabilities of the firm. 3. Partners loan to firm. At the time of dissolution, first of all the dissolution expenses and then the liabilities of the firm are paid from the realization of the assets of the firm. Then, from surplus, the loan of partners is redeemed. If after making the payment of firm's liabilities, the available surplus is insufficient to return back loan of more than one partner and nothing can be recovered from partners, in this case, the loan of these partners is redeemed in their loan proportion. 4. Loan of partner's wife. If wife of a partner has given a loan to the firm from her personal fund, this loan will be treated as a liability towards the third party and will be redeemed accordingly. If loan is given from the personal fund of her husband, then it will be treated as a loan of a partner. 5. Liability of partners. Liability of partners is unlimited. If a partner or partners becomes insolvent, solvent partners are responsible to pay the dues of the firm from their personal property. 6. Distribution of assets, realization of firm. The realization of asset of the firm is paid in the following order. A. First of all, dissolution expense is paid. B. Next, liabilities towards third parties are paid. C. Next, loan of partners paid. D. Finally, capital and balances of current accounts of partners are redeemed. E. Even if any surplus remains after the payment shown in D, surplus will be distributed among all the partners in their profit-loss sharing ratio. C. General procedure of dissolution. When a firm is dissolved, at that time all assets of the firm are sold and the payment is made in the mentioned order. Due to the accounting treatments of dissolution, books of accounts of the firm will be closed. 5. Accounting treatments of dissolution. At the time of dissolution of firm, all assets of firm are sold and liabilities are paid from the realized income. If surplus remains, capital is redeemed. Books of accounts are closed. To incorporate complete procedure, the following accounting treatments are given. A. Preparation of necessary accounts. The following accounts are prepared to follow the accounting procedure of dissolution and to give the accounting treatments. 1. Realization account. 2. Partners loan account, if any. 3. Partners capital accounts or current accounts. 4. Cash or bank account. 1. Realization account. An account which is prepared at the time of dissolution to give the accounting treatments to dispose of assets and payment of liabilities is known as realization account. To close assets and liabilities excluding cash or bank account are transferred to realization account at their book value at the time of the dissolution of a firm. Subsequently, amount realized from the sale of assets is debited to cash account and credited to the realization account. Payment of liabilities is debited to realization account and credited to cash account. The difference of realization account will be either profit or loss. This difference is allocated between the partners in their profit sharing ratio. Profit is credited to their capital account, loss is debited to their capital account. To incorporate above mentioned dissolution related accounting treatments, realization account is prepared. The profit or loss of the realization account is allocated between the partners, therefore it is type of nominal account. 2. Partners loan account. Many times for financial assistance purpose, partners provide loan to the business. At the time of dissolution of a firm, partners loan is repaid prior to the redemption of the capital of partners. Thus, at the time of dissolution, partners loan accounts are also prepared. That is, when loan is provided by the partners. 3. Partners capital accounts or current accounts. Earlier, detailed study of partners capital accounts or current accounts is undertaken. At the time of dissolution, partners capital is redeemed after the payment of all the liabilities. 4. Cash or bank account. Since firm is dissolved, all transactions are done in cash form or through bank. Cash account is not transferred at the realization account. All cash receipts and payments are recorded in this account. At last, surplus is paid to the partners. Journal entries for the preparation of dissolution accounts. A. Before recording journal entries, prepare above stated necessary accounts. B. Disclose balances in partners' capital accounts and cash or bank account. C. Disclose balances in partners' loan accounts, if any. 1. Balances of accumulated reserve and undistributed profit. First of all, balances of accumulated reserves are shown in the balance sheet of the firm like general reserve, workman compensation fund, credit balance of profit and loss account, debit balance of profit and loss account, etc. These amounts are not transferred to the realization account. These amounts are transferred to the partner's capital account in their profit sharing ratio. These accounts are not either assets or liabilities, but component of capital. Hence, it is transferred to the capital account. Journal entry for this is as follows. 1. Reserves and credit balance of profit and loss account. Profit, date, particulars, ledger folio, debit amount, credit amount. Reserve account debit, investment fluctuation fund account debit, workman accident compensation fund account debit, profit and loss account, profit, account debit, to partners capital account. Being reserves and undistributed profit credited to partners capital account in their profit and loss sharing ratio. 2. Debit balance of profit and loss account. Loss, date, particulars, ledger folio, debit amount, credit amount. Partners capital account debit to profit and loss account. Loss, being debit balance of profit and loss account, that is loss debited to capital account of partners in their profit and loss sharing ratio. 2. When assets are closed and transferred to the realization account. Assets always disclose debit balance. At the time of dissolution of a firm, except cash bank account, all assets accounts disclosed in balance sheet are transferred to the debit side of realization account at their book value. To close assets account, their accounts are credited. Example, land building, plant machinery, furniture, investments, debtors, goodwill, patent, trademark, copyright, bills receivable, etc., where journal entry will be as follows. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit to land building account, to plant machinery account, to furniture account, to investments account, to debtors account, to bills receivable account, to other assets account. Being assets, accounts are closed and transferred to realization account at their book value. 3a. When accounts of provisions are closed and transferred to the realization account. Provisions always disclose credit balance. At the time of dissolution of a firm, all provisions accounts disclosed in balance sheet are transferred to the credit side of realization account at their book value. To close provision accounts, their accounts are debited. Example, bad debt reserve, depreciation fund account, discount reserve on debtors, or bills receivable account, etc. Date, particulars, ledger folio, debit amount, credit amount. Bad debt reserve account debit, depreciation fund account debit, discount reserve on debtors and bills receivables account debit to realization account. Being provisions, accounts are closed and transferred to realization account. 3b. When liabilities accounts are closed and transferred to the realization account. Liabilities always disclose credit balance. At the time of dissolution of firm, liabilities accounts disclosed in balance sheet are transferred to the credit side of the realization account at their book value. To close liabilities accounts, their accounts are debited. Example, creditors, bills payables, bank overdraft, provident fund, workman profit sharing fund, outstanding expenses, etc. Journal entry will be as follows. Date, particulars, ledger folio, debit amount, credit amount. Creditors account debit, bills payable account debit, bank overdraft account debit, workman profit sharing fund account debit, outstanding expenses account debit to realization account. Being liabilities accounts are closed and transferred to realization account. 4. When assets are sold. A. Sale of assets. In this case, assets are sold in open market. The realization of sale of assets is debited to the cash bank account and realization account is credited. Date, particulars, ledger folio, debit amount, credit amount. Cash bank account debit to realization account. Being sale of assets is credited to realization account. B. When assets taken over by a partner. When any asset is taken over by a partner, at that time partner's account is debited and realization account is credited. Date, particulars, ledger folio, debit amount, credit amount. Respective partner's capital account debit to realization account. Being assets taken over by partner is debited to his account and credited to realization account. C. When income is received from unrecorded asset. Date, particulars, ledger folio, debit amount, credit amount. Cash account debit to realization account. Being amount realized is unrecorded as asset. 5. When liabilities are paid. A. Paid in cash. When liabilities of the firm are paid in cash, realization account is debited and cash bank account is credited. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit to cash bank account. Being all liabilities is paid. B. When liabilities payment is accepted by a partner. When any partner pays the liability or accepts to pay the liability of the firm, in this case realization account is debited and respective partner's capital is credited. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit to respective partner's capital account. Being partner has accepted liability for payment. C. When unrecorded liability is paid. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit to cash bank account. Being unrecorded liability is paid. 6. When dissolution expense of partnership firm is paid. Generally, dissolution expense of partnership firm is borne by the firm itself. The accounting treatment of dissolution expense for different situations can be given as follows. A. When dissolution expense is paid by a firm and to be borne by the firm. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit to cash bank account. Being dissolution expense is paid. B. When any partner accepts liability. 1. No accounting treatment is given if the dissolution expense is to be borne and paid by any partner. But when any remuneration is payable to the respective partner to perform the responsibility of dissolution procedure, the following entry will be passed. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit to respective partner's capital account. Being remuneration is paid to partner for performance of dissolution procedure. 2. When the responsibility of the payment of the dissolution expense is accepted by a partner but payment is made by the firm. In this case, following journal entry will be passed. Date, particulars, ledger folio, debit amount, credit amount. Respective partner's capital account debit to cash bank account. Being dissolution expense of the firm paid on the behalf of partner. 7. When loan of partner is paid. Date, particulars, ledger folio, debit amount, credit amount. Partner's loan account debit to bank cash account. Being paid for loan of partner. 8. Distribution of balance of realization account. The balance of realization can be in the form of profit or loss. This profit or loss is distributed to the partner's current account or capital account in the profit-loss sharing ratio. A. In case of profit. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit to partner's current account or capital account. Being profit of realization account is distributed to partner's current or capital account. B. In case of loss. Date, particulars, ledger folio, debit amount, credit amount. Partner's current account or capital account debit to realization account. Being loss of realization account is distributed to partner's current or capital accounts. 9. When partner's current accounts are closed. At the time of dissolution, partner's current accounts are to be closed and are transferred to capital accounts. 1. When current accounts show credit balance. Date, particulars, ledger folio, debit amount, credit amount. Partner's current account debit to partner's capital account. Being balance current accounts of partners are transferred to capital account. 2. When current accounts show debit balance. Date, particulars, ledger folio, debit amount, credit amount. Partner's capital account debit to partner's current account. Being balance of current accounts of partners is transferred to capital account. 10. When partners' capital accounts are closed. 1. When closing balance of partner's capital account is debit balance and partner brings cash. Date, particulars, ledger folio, debit amount, credit amount. Bank cash account debit to partner's capital account. Being partner brought cash for his debit balance of capital account. 2. When closing balance of partner's capital is credit balance and payment is made to partner. Date, particulars, ledger folio, debit amount, credit amount. Partner's capital account debit to bank cash account. being cash is paid to partners for their credit balance of capital account. 11. Accounting treatments of special transactions. 1. When unrecorded assets are given to recorded creditor for his due. In these kinds of circumstances, from total amount of creditors, the amount of unrecorded assets is deducted and remaining amount of creditors is paid to them. Example, there are total creditors of Rs 90,000. One unrecorded asset is given to the book creditor of Rs 50,000 against his due. Total creditors Rs 90,000 less unrecorded assets given to the creditors Rs 50,000. Remaining creditors will be paid Rs 40,000. Its journal entry will be as follows. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit 40,000 to bank cash account 40,000. Being creditors are paid. 2. When partial payment is made for unrecorded liability through unrecorded asset. Example, Rs 40,000 are payable to Amul but not recorded in the books. The unrecorded asset of Rs 20,000 is given to him and remaining amount is paid by check. Rs 40,000 payable for unrecorded liability less Rs 20,000 given unrecorded asset. Total Rs 20,000 payable amount. In this case, following journal entry will be given for paid amount. Date, particulars, ledger folio, debit amount, credit amount. Realization account debit 20,000 to bank account 20,000. Being amount is paid for unrecorded liability. Specimen of realization account. Realization account. On debit side, particulars amount to sundry assets account. Journal entries number. Land building, plant machineries, furniture, investments, debtors, bills receivable, other assets, total. 2. To cash bank account, that is payment of liabilities, 5A. To partner's capital account, that is liability accepted by partner, 5B. To cash bank account, that is payment of unrecorded liabilities, 5C. To cash bank account, that is payment of dissolution expense, 6A. To partner's capital account, that is remuneration of partner, 6B2. To partner's current or capital account, that is distribution of profit of realization account, 8A. On credit side, particulars amount by provisions account, journal entry number, bad debts reserve, depreciation fund, discount reserve on debtors, bills receivable, total, 3A. By sundry liabilities account, creditors, bills payable, bank overdraft, workman profit sharing fund, outstanding expense, total, 3B. By cash bank account, that is sale of assets, 4A. By partner's capital account, that is asset taken over by partner, 4B. By cash bank account, sale of unrecorded asset, 4C. By partner's current or capital account, that is distribution of loss of realization account, 8B. Illustration 1. Past journal entries for the following transactions. 1. Land building 8 lakh and investments 2 lakh are disclosed in the balance sheet at the time of dissolution. 9 lakh and 1 lakh 50,000 are realized respectively from them. Date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 10 lakhs to land building account 8 lakh to investment account 2 lakh. Being at the time of dissolution, land building and investment accounts is closed and transfers them to realization account. 2. Cash bank account debit 10 lakh 50,000 to realization account 10 lakh 50,000. Being amount realized from sale of land, building and investments. 2. At the time of dissolution, total assets of the firm are of Rs 4 lakh. Out of that, 40% are current assets, where cash is included of Rs 20,000. 120% of fixed assets are realized, 80% are realized from current assets. Answer. Explanation. Assets Rs 4 lakh, current assets 40% on Rs 1 lakh 60,000. Under this, cash 20,000, other current assets is how much? Rs 1 lakh 40,000 into 80% gives Rs 1 lakh 12,000 realized. Whereas fixed assets 60%, Rs 2 lakh 40,000 into 120% gives rupees 2,88,000 realized. Journal entries, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 3,80,000 to fixed assets account 2,40,000 to current assets account 1,40,000. Being assets accounts are closed and transferred to realization account. 2. Cash bank account debit 4 lakh to realization account 4 lakh. Being rupees 2,88,000 realized from fixed assets and 1,12,000 realized from current assets. 3. At the time of dissolution of firm, the value of machinery was of rupees 70,000. It is taken by one partner for rupees 78,000. Answer: journal entries, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 70,000 to machinery account 70,000. Being machinery account closed and transferred to realization account. 2. Partners capital account debit 78,000 to realization account 78,000. Being at the time of dissolution, partner taken machines for rupees 78,000. 4. Dissolution expense of the firm is rupees 20,000. Answer: journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 20,000 to cash bank account 20,000. Being dissolution expense 5. At the time of dissolution of partnership firm, following assets are appeared in the book: building rupees 2 lakh, furniture rupees 40,000, goodwill rupees 20,000, machinery rupees 30,000. Realized rupees 2,20,000 from building, rupees 50,000 for furniture and machinery at book value. No value is realized for goodwill. Pass necessary journal entries. Answer: journal entries, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 2,90,000 to building account 2 lakh, to furniture account 40,000, to goodwill account 20,000, to machinery account 30,000. Being firm is dissolved, all assets are transferred to realization account. 2. Cash bank account debit 3 lakh to realization account 3 lakh. Being rupees 2,20,000 for building, rupees 50,000 for furniture and rupees 30,000 machinery are realized. 6. Bad debt of rupees 12,000 was written off, out of which rupees 10,000 are received. Answer: journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Cash bank account debit 10,000 to realization account 10,000. Being amount received for bad debts. 7. There is no value of goodwill in the books of a firm, but at the time of dissolution, rupees 35,000 realized for it. Answer: journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Cash bank account debit 35,000 to realization account 35,000. Being realized for goodwill. 8. Partner Naresh accepts to pay rupees 30,000 for bills payable. Answer: journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Bills payable account debit 30,000 to realization account 30,000. Being bills payable account closed. 2. Realization account debit 30,000 to Naresh's capital account 30,000. Being Naresh has accepted to pay bills payable. 9. At the time of dissolution of the firm, debtors are of rupees 80,000 and creditors of rupees 40,000. Partner Pratik accepts debtors at 20% less than book value and paid to creditors. Answer: journal entries, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 80,000 to debtors account 80,000. Being debtors are transferred to realization account. 2. Creditors account debit 40,000 to realization account 40,000. Being creditors are transferred to realization account. 3. Pratik's current or capital account debit 64,000 to realization account 64,000. Being Pratik has accepted debtors at 20% less than book value. 4. Realization account debit 40,000 to Pratik's current or capital account 40,000. Being Pratik has paid to creditors. 10. A partner Vijay has accepted responsibility for dissolution procedure of the firm. A firm has decided to pay remuneration of Rs 12,000 for this task. A firm has paid him Rs 6,000 for expense. Answer. Journal entry. Date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 12,000 to Vijay's capital account 12,000. Being dissolution expense becomes payable to partner Vijay. 2. Vijay's account debit 6,000 to cash bank account 6,000. Being paid to Vijay for dissolution expense responsibility. 11. Income tax liability of the partnership firm is determined for Rs 35,000. It is not recorded in the books. Answer. Journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 35,000 to cash bank account 35,000. Being unrecorded income tax liability is paid. 12. At the time of liquidation, after making payment of all liabilities and partner's loan, surplus of asset is Rs 60,000. The profit loss sharing ratio of S, B and I are 4:3:3. Answer. Journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 60,000 to S current or capital account 24,000 to B's current or capital account 18,000 to I's current or capital account 18,000. Being excess of assets distributed among partners in the ratio of 4:3:3. 13. Realized Rs 25,000 for unrecorded machine at the time of dissolution. Answer. Journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Cash account debit 25,000 to realization account 25,000, being realized from sale of unrecorded machine. 14. On due payment of Rs 35,000, unrecorded furniture of Rs 20,000 given to Mahesh. The remaining amount is paid in cash. Answer. Journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 15,000 to cash bank account 15,000. Being creditor Mahesh of Rs 35,000 are given unrecorded furniture of Rs 20,000 and remaining amount of Rs 15,000 paid in cash. 15. One partner accepts to pay loan of his wife Rs 40,000. Answer. Journal entry, date, particulars, ledger folio, debit amount, credit amount. 1. Srimati's loan account debit 40,000 to realization account 40,000. Being Srimati's loan account closed. 2. Realization account debit 40,000 to respective partner's capital account 40,000. Being partner has accepted to pay his wife's loan. Illustration 2. Tushar and Deepak are partners sharing profit loss in the proportion of 4:2. The balance sheet of their firm as on 31st March 2016 is as follows. Balance sheet, liabilities amount, assets amount. On liability side, capital accounts, Tushar 68,000, Deepak 49,000, total 1,17,000. General reserve 6,000, creditors 80,000, Tushar's loan 42,000. Total of liabilities 2,45,000. On asset side, land building 67,000, machinery 70,000, stock 22,000, debtors 16,000 less bad debt reserve 1,000, total 15,000, cash balance 71,000, total of assets 2,45,000. Firm is dissolved on 31st March 2016. You are provided the following information. 1. Realized Rs 93,000 from land building. 2. Tushar took machinery at Rs 76,000. 3. Realized Rs 12,000 from stock. 4. Rs 15,000 recovered from debtors. 5. Dissolution expense is Rs 10,000. Write necessary journal entries in the books of firm and prepare necessary accounts also. Answer. Journal entries, date, particulars, ledger folio, debit amount, credit amount. 1. Realization account debit 1,75,000 to land building account 67,000 to machinery account 70,000 to stock account 22,000 to debtors account 16,000. Being all assets accounts are closed and transferred them to realization account. 2. Creditors account debit 80,000, bad debts reserve account debit 1,000 to realization account 81,000. Being liability account and provision account are closed and transferred them to realization account. 3. General reserve account debit 6,000 to Tushar's capital account 4,000 to Deepak's capital account 2,000. Being general reserve distributed to partners in their profit and loss sharing ratio. 4. Cash bank account debit 1,20,000 to realization account 1,20,000. Being amount realized from assets, land building 93,000, at stock 12,000, at debtors 15,000. 5. Tushar's capital account debit 76,000 to realization account 76,000. Being machinery has taken by Tushar transferred to his capital account. 6. Realization account debit 80,000 to bank cash account 80,000. Being rupees 80,000 paid to creditors. 7. Realization account debit 10,000 to cash bank account 10,000. Being dissolution expense paid. 8. Tushar's loan account debit 42,000 to cash bank account 42,000. Being Tushar's loan returned to him. 9. Realization account debit 12,000 to Tushar's capital account 8,000 to Deepak's capital account 4,000. Being profit of realization account is distributed between partners in their profit and loss sharing ratio. 10. Tushar's capital account debit 4,000, Deepak's capital account debit 55,000 to cash bank account 59,000. Being final payment is made. Realization account. On debit side, particulars amount. On credit side, particulars amount. On debit side, to sundry assets account, land building 67,000, machinery 70,000, stock 22,000, debtors 16,000, total 1,75,000. To cash account, to creditors 80,000. To dissolution expense 10,000. To capital account, that is profit, Tushar 8,000, Deepak 4,000, total 12,000. Total of debit side 2,77,000. On credit side, by sundry liabilities account, creditors 80,000, bad debt reserve 1,000, total 81,000. By cash account, land building 93,000, stock 12,000, debtors 15,000, total 1,20,000. By Tushar's capital account, machinery 76,000. Total of creditors 2,77,000. Tushar's loan account. On debit side, particulars amount. To cash account 42,000. Total of debit side 42,000. On credit side, particulars amount. By balance brought down 42,000. Total of credit side 42,000. Partners capital account. On debit side, particulars Tushar's amount, Deepak's amount. To realization account, machinery Tushar 76,000. To cash bank account 4,000, 55,000. Total of debit side Tushar's rupees 80,000, Deepak's rupees 55,000. On credit side, particulars Tushar's amount, Deepak's amount. By balance brought down 68,000, 49,000. By general reserve 4,000, 2,000. By realization account, that is profit, 8,000, 4,000. Total of credit side Tushar's rupees 80,000, Deepak's rupees 55,000. Cash bank account. On debit side, particulars amount. To balance brought down 71,000. To realization account, land building 93,000, debtors 15,000, stock 12,000. Total 1,20,000. Total of debit side 1,91,000. On credit side, particulars amount. By realization account, creditors 80,000, dissolution expense 10,000, total 90,000. By Tushar's loan account 42,000. By capital account, Tushar 4,000, Deepak 55,000, total 59,000. Total of credit side 1,91,000. Method for preparation of realization account. It is a time-consuming process to dispose of all the assets and the payment of liabilities after the dissolution of a partnership firm. In this method, assets and liabilities are not transferred to realization account, but accounts of assets and liabilities remain unaffected. Accounts of respective assets and liabilities are open in this method. Consequently, 1. Amount realized from the respective asset is debited to cash bank account and credited to respective asset account. Any difference of respective asset account, that is profit or loss, is transferred to realization account. 2. Amount paid for the respective liabilities is credited to cash bank account and debited to respective liability account. Any difference of respective liability account, that is profit or loss, is transferred to the realization account. Dissolution expense is debited to the realization account. At last, realization account is to be closed and the difference of realization account is transferred to the partners' capital accounts in their profit-loss sharing ratio. Illustration 3. Binal, Dharmishta and Mahesh are partners sharing profit and loss in the ratio of 4:3:2. Firm was dissolved on 30th September 2016. On that day, the status of the firm was as follows. Balance sheet as on 30th September 2016. On liability side, capital accounts, Binal 4,80,000, Dharmishta 3,60,000, Mahesh 2,40,000, total 10,80,000. Creditors 4,20,000, total of liabilities 15 lakhs. On asset side, sundry assets 14,80,000, cash balance 20,000, total of assets 15 lakhs. 1. Rupees 13,90,000 realized from sundry assets. 2. Creditors are paid rupees 3,70,000 as a final settlement. 3. Dissolution expense paid rupees 20,000. 4. Rupees 30,000 paid for unrecorded taxes. Prepare necessary accounts. Answer. Realization account. On debit side, particulars amount to sundry asset account 14,80,000, to cash account creditors 3,70,000, to cash account dissolution expense 20,000, taxes 30,000, total 50,000. Total of debit side 19 lakhs. On credit side, particulars amount by creditors account 4,20,000, by cash account realization of assets 13,90,000, by capital accounts loss 4:3:2, Binal 40,000, Dharmishta 30,000, Mahesh 20,000, total 90,000. Total of creditors 19 lakh. Cash account. On debit side, particulars amount to balance brought down 20,000, to realization account sundry assets 13,90,000, total of debit side 14,10,000. On credit side, particulars amount by realization account creditors 3,70,000, dissolution expense 20,000, taxes 30,000, total of credit side 4,20,000. By capital accounts, Binal 4,40,000, Dharmishta 3,30,000, Mahesh 2,20,000, total 9,90,000. Total of credit side 14,10,000. Partners' capital accounts. On debit side, particulars Binal's rupees, Dharmishta's rupees, Mahesh's rupees. To realization account 40,000, 30,000, 20,000. To cash account 4,40,000, 3,30,000, 2,20,000. Total of debit side Binal 4,80,000, Dharmishta 3,60,000, Mahesh 2,40,000. On credit side, particulars Binal's rupees, Dharmishta's rupees, Mahesh's rupees. By balance brought down 4,80,000, 3,60,000, 2,40,000. Total of credit side Binal's rupees 4,80,000, Dharmishta's 3,60,000, Mahesh 2,40,000. Illustration 4. Vrushita, Dhyana and Sapna are partners sharing profit loss in equal proportion. On 31st March 2017, partners have decided to dissolve the firm. Balance sheet of that day is given. Balance sheet as on 31st March 2017. Liabilities amount, assets amount. On liability side, capital Vrushita 56,000, Dhyana 40,000, Sapna 20,000, total 1,16,000. Loan of Dhyana 8,000, creditors 20,000, bills payable 16,000. Total of liabilities 1,60,000. On asset side, goodwill 4,000, building 60,000, furniture 20,000. Debtors 40,000, stock 6,000, cash balance 6,000. Profit and loss account debit balance 24,000. Total of assets 1,60,000. Disposal of assets and liabilities is as follows. 1. Vrushita has taken building for rupees 52,000 and accepted to pay for bills payable. 2. Sapna has taken stock for rupees 8,000. 3. Realized rupees 16,000 for furniture. 4. Rupees 36,000 collected from debtors. 5. Dissolution expense incurred rupees 6,000. 6. Paid for unrecorded stationery bill of rupees 2,000. 7. Bad debts of rupees 4,000 was written off in past, out of which rupees 2,000 received. 8. No value is realized for goodwill. As per Partnership Act, deficit of any partner's capital is to be paid immediately in cash by the partners. Prepare necessary accounts for dissolution accounts. Realization account. On debit side, particulars amount to sundry assets, goodwill 4,000, building 60,000, furniture 20,000, debtors 40,000, stock 6,000, total 1,30,000. To cash account, stationery bill 2,000, dissolution expense 6,000, creditors 20,000, total 28,000. To Vrishita's capital account, bills payable 16,000, total of debit side 1,74,000. On credit side, particulars amount by sundry liabilities, creditors 20,000, bills payable 16,000, total 36,000. By Vrishita's capital account, building 52,000. By Sapna's capital account, stock 8,000. By cash account, furniture 16,000, debtors 36,000, bad debt return 2,000, total 54,000. By partner's capital account, loss Vrishita 8,000, Dhyana 8,000, Sapna 8,000, total 24,000. Total of credit side 1,74,000. Dhyana's loan account. On debit side, particulars amount to cash account 8,000, total of debit side 8,000. On credit side, particulars amount by balance brought down 8,000, total of credit side 8,000. Partners capital accounts. On debit side, particulars Vrishita's rupees, Dhyana's rupees, Sapna's rupees. To profit and loss account, loss 8,000, 8,000, 8,000. To realization account, building Vrishita 52,000. To realization account, stock Sapna 8,000. To realization account, loss 8,000, 8,000, 8,000. Cash account, Vrishita 4,000, Dhyana 24,000. Total of debit side 72,000, 40,000, 24,000. On credit side, particulars Vrishita's rupees, Dhyana's rupees, Sapna's rupees. By balance brought down 56,000, 40,000, 20,000. By realization account, bills payable 16,000. By cash account, deficit Sapna 4,000. Total of credit side 72,000, 40,000, 24,000. Cash account. On debit side, particulars amount to balance brought down 6,000. To realization account, furniture 16,000, debtors 36,000, realization account, bad debt return 2,000. To Sapna's capital account 4,000. Total of debit side 64,000. On credit side, particulars amount by realization account, stationery bill 2,000, dissolution expense 6,000, total 8,000. By realization account, creditors account 20,000, Dhyana's loan 8,000. By Vrishita's capital account 4,000. By Dhyana's capital account 24,000. Total of credit side 64,000. Illustration 5. Kaushal, Krina and Krupansh are partners sharing profit loss in the proportion of 5:3:2. The balance sheet of firm as on 30th September 2016 was as follows. Balance sheet, liabilities amount, assets amount. On liability side, capital, Kaushal 50,000, Krina 30,000, Krupansh 20,000, total 1 lakh. Current accounts, Kaushal 20,000, Krina 10,000, total 30,000. Profit and loss account 1 lakh. Investment fluctuation fund 10,000. Kaushal's loan 50,000. Creditors 2 lakh. Bills payable 60,000. Total of liabilities 5,50,000. On asset side, cash 20,000. Krupansh current account 20,000. Machinery 30,000. Investments 50,000. Goodwill 20,000. Stock 10,000. Debtors 1,20,000. Less bad debt reserve 20,000. Total 1 lakh. Land building 2,20,000. Less depreciation fund 20,000. Total 2 lakh. Motor car 1,30,000. Less depreciation fund 30,000. Total 1 lakh. Total of assets 5,50,000. Partners have decided to dissolve the firm on the date of balance sheet. 1. Dissolution expense was Rs 20,000. 2. Creditors are paid at 10% discount. 3. Unexpected expense paid Rs 10,000. 4. Rs 20,000 received from bad debts which were written off 2 years back. 5. Investments have taken by Kaushal for Rs 60,000. 6. Realization of assets, land building 2,20,000, motor car Rs 80,000. 7. Stock realized at book value. Nothing is realized from goodwill. 8. Full amount of debtors and machines is received. 9. Prepare necessary accounts. Answer. Realization account. On debit side, particulars amount to sundry assets, goodwill 20,000, land building 2,20,000, motor car 1,30,000, machinery 30,000, investments 50,000, debtors 1,20,000, stock 10,000, total 5,80,000. To cash account, creditors 1,80,000, bills payable 60,000, unexpected expense 10,000, dissolution expense 20,000, total 2,70,000. To partners current account, profit Kaushal 10,000, Krina 6,000, Krupansh 4,000, total 20,000. Total of debit side 8,70,000. On credit side, particulars amount by sundry liabilities, creditors 2 lakh, bills payable 60,000, total 2,60,000. By reserves and provisions, bad debt reserve 20,000, land building 20,000, motor car 30,000, total 70,000. By cash account, land building 2,20,000, motor car 80,000, machinery 30,000, debtors 1,20,000, stock 10,000, total 4,60,000. By cash account, bad debt return 20,000. By Kaushal's current account, investments 60,000. Total of credit side 8,70,000. Kaushal's loan account. Debit particulars amount, credit particulars amount. On debit side, to cash account 50,000, total of debit side 50,000. On credit side, by balance brought down 50,000, total of credit side 50,000. Partners current account. On debit side, particulars Kaushal's rupees, Krina's rupees, Krupansh's rupees. To balance brought down Krupansh 20,000, realization account investments Kaushal's 60,000. To partners capital account 25,000, 49,000, 6,000. Total of debit side 85,000, 49,000, 26,000. On credit side, particulars Kaushal's rupees, Krina's rupees, Krupansh rupees. By balance brought down Kaushal 20,000, Krina 10,000. By profit and loss account 50,000, 30,000, 20,000. By investment fluctuation fund 5,000, 3,000, 2,000. By realization account 10,000, 6,000, 4,000. Total of credit side 85,000, 49,000, 26,000. Partners capital accounts. On debit side, particulars Kaushal's rupees, Krina's rupees, Krupansh rupees. To cash account 75,000, 79,000, 26,000. Total of debit side 75,000, 79,000, 26,000. On credit side, by balance brought down 50,000, 30,000, 20,000. By partners current account 25,000, 49,000, 6,000. Total of credit side 75,000, 79,000, 26,000. Cash account. On debit side, particulars amount to balance brought down 20,000, to realization account, to land building 2,20,000, to motor car 80,000, to machinery 30,000, to debtors 1,20,000, to stock 10,000, to bad debt return 20,000. Total of debit side 5 lakhs. On credit side, by realization account, by creditors 1,80,000, by bills payable 60,000, by unexpected expense 10,000, by dissolution expense 20,000, by Kaushal's loan account 50,000, by capital account Kaushal 75,000, Krina 79,000, Krupansh 26,000. Total 1,80,000. Total of credit side 5 lakhs. Explanation. 1. Provisions for assets like depreciation fund and bad debt reserve are closed by crediting them in realization account. There will not be any other accounting entry of them. 2. Kaushal has taken over investments for Rs 60,000. Thus, his current account is debited and realization account is credited. 3. Unexpected expense, dissolution or expenses of business. These are losses. Thus, they are debited to realization account and credited to cash account. 4. Bad debts return is recovery of bad debts written off. It is considered as profit, thus recorded at credit side of realization account. Illustration 6. Satyam, Shivam and Sundaram are partners sharing profit loss in the proportion of 1/2 is to 1/3 is to 1/6. The balance sheet of their firm as on 31st December 2016 as under. Balance sheet as on 31st December 2016. Liabilities amount, assets amount. On liability side, capital accounts Satyam 50,000, Shivam 50,000, Sundaram 50,000, total 1,50,000. General reserve 60,000. Investment fluctuation fund 50,000. Provident fund 1 lakh. Creditors 2 lakh. Current accounts Satyam 5,000, Shivam 10,000. Total of 15,000. Total of liability side 5,75,000. On asset side, land building 2,50,000, machinery 1,50,000, investments 1 lakh, patents 5,000, goodwill 25,000, debtors 30,000, less bad debt reserve 5,000, total 25,000, stock 15,000, cash 5,000, total of assets 5,75,000. The firm was dissolved on 1st January 2017. Disposal of assets and liabilities was done as under 1. Sale of land and building rupees 4 lakhs, machinery rupees 1 lakh, investments rupees 50,000 and stock rupees 5,000. 2. From debtors rupees 15,000 are received, written off remaining. 3. Out of total creditors, a creditor of 10% was given unrecorded investments of rupees 10,000 and remaining amount paid in cash. Remaining creditors are paid at 10% discount. 4. Unrecorded expense of stationery rupees 6,000 paid to Arihant Stationery Mart. No amount is realized for goodwill and patents. 5. A remuneration of rupees 15,000 was decided to pay to Shivam to perform dissolution procedure. Actual dissolution expense rupees 6,000 paid by Shivam. Prepare necessary accounts to close books of the firm. Answer: realization account, debit particulars amount, credit particulars amount. On debit side, to sundry asset, land building 2,50,000, machinery 1,50,000, investments 1 lakh, patent 5,000, goodwill 25,000, debtors 30,000, stock 15,000, total 5,75,000. To cash account, creditors 10,000 plus 1,62,000, total 1,72,000. Stationery expenses 6,000, provident fund 1 lakh, total 2,78,000. To Shivam's current account, remuneration 15,000. To current accounts, profit 3:2:1, Satyam 28,500, Shivam 19,000, Sundaram 9,500. Total 57,000. Total of debit side 9,25,000. On credit side, by provision and reserve account, investment fluctuation fund 50,000, bad debt reserve 5,000, total 55,000. By sundry liabilities account, provident fund 1 lakh, creditors 2 lakh, total 3 lakh. By cash account, land building 4 lakh, machinery 1 lakh, investments 50,000, stock 5,000, debtors 15,000, total 5,70,000. Total of credit side 9,25,000. Cash account. On debit side, particulars amount. On credit side, particulars amount. On debit side, by balance brought down 5,000. To realization account, land building 4 lakh, machinery 1 lakh, investments 50,000, stock 5,000, debtors 15,000. Total 5,70,000. Total of debit side 5,75,000. On credit side, by realization account, creditors 1,72,000, stationery expense 6,000, provident fund 1 lakh, total 2,78,000. By capital accounts, Satyam 1,13,500, Shivam 1,14,000, Sundaram 69,500, total 2,97,000. Total of credit side 5,75,000. Partners' current accounts. Debit particulars Satyam rupees, Shivam rupees, Sundaram rupees. On debit side, to capital accounts 63,500, 64,000, 19,500. Total of debit side Satyam 63,500, Shivam 64,000, Sundaram 19,500. On credit side, particulars Satyam's rupees, Shivam's rupees, Sundaram's rupees. By balance brought down, Satyam 5,000, Shivam 10,000. By general reserve account 30,000, 20,000, 10,000. By realization account, remuneration, Shivam 15,000. By realization account, profit 28,500, 19,000, 9,500. Total of credit side Satyam 63,500, Shivam 64,000, Sundaram 19,500. Partners' capital accounts. On debit side, particulars Satyam's rupees, Shivam's rupees, Sundaram's rupees. To cash account 1,13,500, 1,14,000, 69,500. Total of debit side Satyam 1,13,500, Shivam 1,14,000, Sundaram 69,500. On credit side, by balance brought down 50,000, 50,000, 50,000. By current accounts 63,500, 64,000, 19,500. Total of credit side Satyam 1,13,500, Shivam 1,14,000, Sundaram 69,500. Illustration of balancing figures. When opening balance is not provided. Sometimes at the time of dissolution, balance sheet is not provided in the question. In this situation, non-available information is to be ascertained. Thus, to find out non-available information, it is required to prepare balance on the date of dissolution. In brief, if balance sheet is not available on the date of dissolution, firstly, prepare balance sheet and then solve the problem. Illustration 7. Deepak, Parag and Pranay are partners sharing profit loss in the proportion of 1/2 is to 1/3 is to 1/6. They have decided to dissolve the firm on 31st May 2016. On that day, balance sheet was not prepared, but you are provided the following information. 1. Total assets of the firm are rupees 20 lakhs, out of which 40% are current assets, where cash balance of rupees 1 lakh included. 2. Liabilities are 3/4 of total current assets, in which employee provident fund of rupees 2 lakh is not included. At the time of dissolution of the firm, disposal of assets and liabilities was as follows. 1. 120% of fixed assets are realized while 80% of current assets are realized. 2. 100% provident fund paid. 3. Other liabilities are paid at 10% discount. 4. Dissolution expense was rupees 1 lakh. The total capital of the firm is reported in the total profit sharing ratio of partners. Prepare necessary accounts. Answer. From the given details, first of all, balance sheet will be prepared. The profit loss sharing ratio for Deepak, Parag and Pranay is 1/2 is to 1/3 is to 1/6 respectively. By using lowest common factor, the proportion of profit and loss will be 3:2:1. Balance sheet before dissolution of the firm. Liabilities amount, assets amount. On liability side, capital Deepak 6 lakhs, Parag 4 lakh, Pranay 2 lakh. Total 12 lakhs. Employees Provident Fund 2 lakh. Liabilities 6 lakhs. Total of liabilities 20 lakhs. On asset side, current assets 7 lakhs, cash balance 1 lakh, fixed assets 12 lakhs. Total of assets 20 lakhs. Explanation. Total assets rupees 20 lakhs. Therein, current assets 40%, rupees 8 lakh, whereas fixed assets 60%, it is 12 lakhs. Cash balance 1 lakh, other current assets 7 lakhs. 2. Liabilities is equals to current assets 3/4. 8 lakhs into 3/4 is equals to rupees 6 lakhs. 3. Profit and loss sharing ratio Deepak, Parag, Pranay. Deepak 1/2, Parag 1/3, Pranay 1/6. So, Deepak 3/6, Parag 2/6, Pranay 1/6. 4. Total assets 20 lakhs less total liabilities 8 lakhs. Total capital is rupees 12 lakhs. Total capital rupees 12 lakhs. Deepak, Parag, Pranay 3:2:1. So, Deepak got rupees 6 lakhs. Parag got rupees 4 lakh. Pranay rupees 2 lakh. Realization account. Debit particulars amount. Credit particulars amount. On debit side, to sundry assets, to fixed assets 12 lakhs, to current assets 7 lakhs, to cash account, to provident fund 2 lakh, to sundry liabilities 5,40,000, to dissolution expense 1 lakh, to partners capital account, profit Deepak 30,000, Parag 20,000, Pranay 10,000, total 60,000. Total of debit side 28 lakhs. On credit side, by sundry liabilities, by employee provident fund 2 lakh, by sundry liabilities 6 lakhs, by cash account, by fixed assets 14,40,000, By current assets 5,60,000. Total of credit balance 28 lakhs. Cash account. Debit particulars amount, credit particulars amount. On debit side, to balance brought down 1 lakh, to realization account, fixed assets 14,40,000, current assets 5,60,000. Total of credit balance 21 lakhs. On credit side, by realization account, provident fund 2 lakh, central liabilities 5,40,000, total 7,40,000. By realization account, dissolution expense 1 lakh. Partners capital account, Deepak 6,30,000, Parag 4,20,000, Pranay 2,10,000, total 12,60,000. Total of credit side 21 lakhs. Partners capital accounts, debit particulars, Deepak's rupees, Parag's rupees, Pranay's rupees. To cash account 6,30,000, 4,20,000, 2,10,000. Total of debit side 6,30,000, 4,20,000, 2,10,000. On credit side, by balance brought down 6 lakhs, 4 lakhs, 2 lakhs. By realization account profit 30,000, 20,000, 10,000. Total of credit side 6,30,000, 4,20,000, 2,10,000. Illustration 8. On 1st January 2015, Tarak Bhai, Jethalal and Popatlal have commenced partnership firm to share profit loss in the proportion of 5:3:2. Their capital on that date was rupees 5 lakhs, 3 lakhs and 2 lakhs. On 31st December 2016, they have decided to dissolve the firm. On this date, the status of the firm was as follows. Building rupees 5 lakhs, bills payable rupees 1 lakh, creditors rupees 6 lakhs, debtors rupees 4 lakhs, machinery rupees 3 lakhs, cash balance rupees 1 lakh, stock rupees 2 lakh, bills receivable rupees 1 lakh. Debit balance of profit and loss account rupees 1 lakh. Since firm was loss making, it is dissolved and the disposal of assets and liabilities are as follows. 1. Tarak Bhai has taken over building at 20% more than book value against which he accepted to pay to the creditors. 2. Jethalal has taken machinery at 10% less and stock at 10% more than book value. He has accepted to pay bills payable. 3. Popatlal has taken debtors at 20% less than book value. Note 1. Bills receivable becomes valueless. 2. Outstanding government tax paid rupees 80,000. 3. Dissolution expense of firm rupees 30,000. Prepare realization account, partners capital accounts and cash account. Answer. Balance sheet as on 31st December 2016. Liabilities amount, assets amount. On liability side, capital accounts Tarak Bhai 5 lakhs, Jethalal 3 lakhs, Popatlal 2 lakhs, total 10 lakhs, creditor 6 lakhs, bills payable 1 lakh, total of liabilities 17 lakhs. On asset side, building 5 lakhs, machinery 3 lakhs, debtors 4 lakhs, bills receivable 1 lakh, stock 2 lakhs, cash balance 1 lakh, profit and loss account 1 lakh, total of assets 17 lakhs. Realization account, debit particulars amount, credit particulars amount. On debit side, to sundry assets account, building 5 lakhs, machinery 3 lakhs, debtors 4 lakh, bills receivable 1 lakh, stock 2 lakh, total 15 lakh. To Tarak Bhai's capital account, creditors 6 lakhs. To Jethalal's capital account, bills payables 1 lakh. To cash account, government tax 80,000, dissolution expense 30,000, total 1,10,000. Total of debit side 23,10,000. On credit side, by sundry liabilities account, creditors 6 lakhs, bills payable 1 lakh, total 7 lakh. By Tarak Bhai's capital account, building 6 lakhs. By Jethalal's capital account, stock 2,20,000, add machinery 2,70,000, total 4,90,000. By Popatlal's capital account, debtors 3,20,000. By capital accounts, loss 5:3:2, Tarak Bhai 1 lakh, Jethalal 60,000, Popatlal 40,000. Total 2 lakh. Total of credit side 23,10,000. Cash account. Debit particulars amount, credit particulars amount. To balance brought down 1 lakh. To Jethalal's capital account 1,80,000. To Popatlal's capital account 1,80,000. Total of debit side 4,60,000. On credit side, by realization account, government tax plus dissolution expense 1,10,000. By Tarak Bhai's capital account, 3,50,000. Total of credit side 4,60,000. Partners capital accounts. Debit particulars Tarak Bhai's rupees, Jethalal's rupees, Popatlal's rupees. Credit particulars Tarak Bhai's rupees, Jethalal's rupees, Popatlal's rupees. To profit and loss account 50,000, 30,000, 20,000. To realization account building Tarak 6 lakhs. To realization account debtors Popatlal 3,20,000. To realization account stock plus machinery Jethalal 4,90,000. To realization account loss 1,60,000, 40,000. To cash account Tarak 3,50,000. Total of debit side Tarak 11 lakhs, Jethalal 5,80,000, Popatlal 3,80,000. On credit side, by balance brought down 5 lakhs, 3 lakhs, 2 lakhs. By realization account, creditors Tarak 6 lakhs. By realization account, bills payable Jethalal 1 lakh. By cash account, Jethalal 1,80,000, Popatlal 1,80,000. Total of credit side 11 lakhs, 5,80,000, 3,80,000.